Welcome to the bottom line. My name is Benjamin Poole.
And I'm Gareth Soloway here.
And I'm back, baby. Here we go.
He's back in the bottom line.
Right. Here we go. All right, last week I was gone. I was in Oregon, so we had Drew. Thankfully, he filled in for us. So I appreciate that, Drew. He's over there. So we've got a crazy market.
It's been a wild week,
man.
Holy
We've had
cow.
some tanks in the markets. Some stocks like Ford dropping huge, and then 3M.
3M up 20%. Biggest
20%
gain ever.
Ever.
Right? And that stock's not like an IPO in the last 20 years. That's been around for a long time.
That's right.
So.
All right, so we're going to go ahead and get some charts. We got some exciting news we're going to show you.
Yeah, let's get right into it here, guys.
All right.
So check this out. So this is the chart of the S&P, right? And so what we're looking at here is that you had this upsloping channel or trend line, and it starts all the way back in October of 2023, right through this zone here, right there. And then look, we pierced it yesterday, and they're saving it today. Now, what you know, if you know the methodology that we teach, is that there's a trend line, right? And what you usually do is you do 1 hit, 2 hit, 3 hit, and you still bounce. So this is 1, 2, 3, and so you should bounce here. But usually after that, the risk is for a breakdown. So the idea is eventually we could head down here on the chart and break this trend line. That's what I'm thinking will happen. So just to be aware of that is that, again, the methodology tells you that on the hit, the first hit, second hit, third hit, you bounce. Fourth hit is a 50-50 chance of a break. Fifth hit, you favor the break by quite a bit. So you're expecting a bounce here. There's a gap fill right up here. Generally, this will be a shallower bounce. And then the next rollover, you have to start preparing yourself. Put on your seatbelt, your big boy and girl pants, and be ready. Because when this thing gives, when this trend line gives, holy cow, it could get nasty out there. All right, Ben, over to you.
Okay, whoa, you all right?
I'm good,
All right,
good.
here we go. We have Ford. Ford looked like it was about to break out. It was going to all-time highs, but the electric vehicle market, oh man, it's tanked. So you had this pivot high right here, it connects this high right here, and then it hit, that was the third hit, so this fourth hit, it broke out. So what you were looking for is a retrace of the scene of the crime. Well, oftentimes, the biggest moves come from failed moves, and that is exactly what happened on Ford. You had this earnings. The last time it moved on earnings was at 4.5%. This thing dropped 20%. So this thing is at almost its recent lows. I was actually expecting it to get down to 1093, where there's a green bar candle, which is going to be a lot of support. You've also got another pivot. So this is the green bar candle right here. You got this pivot right here. And then all this price action right here. So if Ford continues to flush, that is the key level to get into this stock. I don't know that you're going to find a better price ever on this, at least going forward. 20% drop on Ford, it's huge. Now, on the retrace, I expect it to get up to at least $12.95. That would be the 50% retrace just from the high here all the way to the low here, 50%. That's an epic move if it gets back up there.
That is a big move, man. That's a big time drop on the stock. All right, guys, into 3M. Biggest day ever, up 19.2% right now. Incredible, but we've isolated down where the likely stalling point will be, or at least major resistance. Where is it going to be? Look at this beautiful flat top right here, right through here, pivot high, all these pivot highs, and then there's a gap fill right above it. So you're basically looking at resistance around 128 to 130. That is your key level, and it's actually, if you had told me today that there was a potential we would get there today or get close, I would have said you're absolutely crazy. This morning, this was up, 5-6%, Ben, in the pre-market?
Yeah.
And then it just blasted up. I wonder if there's a lot of short covering. Maybe some hedge funds got caught short in this. I don't know. But what I do know is the technical high probability short area or pullback level is right in here. And again, we are getting close. We're at 123 right now, so another $5 to $7 upside, and you're going to be right in this level. That'll be where I look for a short pullback on the stock. All right, what do you got, buddy?
All right, so Dexcom. So they had earnings as well. They crashed on earnings as well. They are down over 40% for a stock in the S&P 500. That is actually pretty incredible. So you've got this pivot low right here. It connects right here, and then you've got this level right here. So actually, this should have been a key level for a bounce. It didn't bounce at that level at all. It actually flushed right through it. So if you are to continue down, I have a level right at 57.54 right here you've got this nice pivot point right here, this price consolidation. And so if it continues down, that's where the next buy level is. And then actually, if you can get this, I actually expect a retrace scene of the crime before an eventual roll over to the downside. So DXM on the list for potential longs and then a short.
Awesome. Right over here, guys. Check this out. Decker, big move today on the back of earnings, but this is a level I talked about in the game plan this morning. I gave this short out. All right, now listen, this was a risky one because it's somewhat of a thinner stock, but look at what you had going into earnings, right? You had what we call is a great channel. You guys know we love our channels here at Verified Investing because they work. All right, so what we have here, all along here, you have the highs and the lows. When we get down to the lows, we went to the highs right here, right? Then we came back down to the lows, and then look what happened just before earnings. We broke down to the downside. So when earnings came out and they were blockbuster, the stock ripped higher. Where is the logical, statistical, high data point where it's going to meet resistance? It would be a retrace to what I call the scene of the crime. Look at this right here. The stock opens today, pushes up right into that same level that used to be support all along here and got rejected. That is picture perfect TA right there, and we all love our TA. All right, what do you got?
All right, so speaking of parallel channels, Ethereum, man, it had this big run up into the ETF announcement, and then we had this huge sell the news event, and now we're trading a little bit lower. It actually, if we get a little bit more sideways consolidation inside of this red bar candle, then we're going to see more downside. So you had Ethereum, give me a sec, hit here, and then you're chopping along the downside of this parallel channel. So if we can get another drop here, then we've got more downside on Ethereum. I can expect to bounce a little bit, but because it's hit so many times, this actually would favor a breakdown in Ethereum. And so I actually expect this to go down.
Oh, very cool. All right, so I think that's good, man. For a Friday, we just covered a crap ton right in a very short amount of time, which is the best
TNA.
thing. There you go, baby.
Some TA.
Yeah.
All
All right, guys, thank you. Say your spiel, bro. You're back. Good to have you back.
Yes. Thank you guys so much for watching. Please keep in mind that this is for educational purposes only, unless, of course, we're right. And then, it was financial advice, right? So anyway, glad to have you guys with us, and we'll see you guys next time.
And that's the bottom line.